All right, that's it for Stock Talk. And now what we're going to do is we're going to move into the most important segment of the week where we hold the Queen's Court. The Queen is our royalty here at Tackle Trading, Queen Emily Mururi, the head of the Dynasty Investors Trading Lab, which, by the way, they meet on Monday nights. And I've been tracking the Discord channel. I know that you guys are having a great time in those labs. And I see a lot of great back and forth discussion about investments and cash flow and all kinds of things. Queen Emily joins us every Tuesday on the show here at the Halftime Report. And those of you who are veterans of the community, you know we do this each week. It's a lot of fun. The coaches get to submit a pick, and Emily gets to judge that pick, whether or not the analysis, the detail, the opportunity was good enough to pass for a week, or if they get chopped. And that chop is a chopping of the head. The executioner is not here, so we're going to have the old school
Matt
way of doing it.
promised he'd bring a big sword.
He showed it on Friday on the halftime show.
He showed it on. Oh, did he?
Yeah,
yeah, that's right. He did.
Yeah.
And now he's not here to use it.
He's not here to use it, but he'll be back next week.
I'll chop his head off next week for not being here today.
My queen, where do you want to start here today?
Well, let's start with you because you gave us that nice introduction. Let's go ahead and have you present your Queen's Court.
All right. In any kingdom, you need the stables, right? You need the staples. You need food. You need agriculture. You need mining. You need metals. You need all of those kind of things, construction, industrials, the same thing in the marketplace. But you know what else you need? You need a little old-fashioned entertainment, including gambling. Gambling's been around since the history of the world. And DraftKings is a company that I have been invested in for over a year now, after they started popping out of their SPAC merger in 2020, developing into a trend. It grabbed my attention. I'm a big football fan. We're starting football season coming up in front of us right now, which is the most important time for gambling companies, in terms of any other sport. Mark used to be a professional gambler. He can attest to that. When football's on, the casinos are full, people are betting, people are gambling. Now, what's interesting about DraftKings from a theme perspective, they just came off of earnings just on Friday. And let me start with a couple of just disclaimers. Number one, I own the stock. Okay. So I do. I've owned it for a long time. I don't write cover calls on it every month. Because it depends on what the technical conditions are. That's the way I approach cover call trading in general. But I love the company as an investment because I believe this is one of those companies, Mark, you can't pin down fundamentals. The fundamentals aren't there. Just look at this week's earnings report on Friday. The company had a 76-cent loss instead of the 61 cents expected. They even lost more money. It jumped up, right? They're still losing money. They're a debt-driven company because that's the phase in their business model they're in. If you go back over the headlines of DraftKings over the last year, what have they done? Deal with the NFL, deal with this casino, deal with this state. They get access to different markets, whatever it might be. They sign a partnership deal with Michael Jordan. They sign a partnership deal with these different people. Even Michael Jordan got a stake of equity in the company as well for being a part of that partnership deal last year. That's when I got so excited about DraftKings, by the way. I see companies with leadership like this splashing deals, moving forward, even being debt driven. I know what they're trying to do. They're trying to change the nature of their industry. DraftKings has grabbed the attention of not just me. It's one of the favored stocks of like a Kathy Wood, those innovation type investment funds, those type of things. It's been out of favor now for the better part of 5 months, right? I mean, really since that uptrend in the spring, early spring, we haven't had much to go off on DraftKings. Here and there, things get exciting. They start developing. There's a couple things that happened recently that I think is worth bringing this one up. The technicals are improving. You've taken time off here. That consolidation has now pushed us up towards resistance. We're on the 200 moving average. It is not a directional trade today, okay? There's nothing about swing trading analysis that I'm bringing to DraftKings analysis today. I'm looking at this from a investment into covered calls when you want to type of play. I believe in the company. I believe in their future. I believe in the deals they're making. Just yesterday, they announced a deal with the Golden Nugget online casino, and they're buying them out. What that deal does for them, it's just one example of how smart DraftKings is. It gets them access into brick and mortar locations in Atlantic City and Las Vegas. I dug into this a little bit more even after our show yesterday. And it gives them access to start partnering with those casinos, to hit those sports books, to create advertising opportunities, efficiency and revenue streams in marketing. I love the deal. I thought it was a great deal for Golden Nugget. Obviously, the stock jumped up almost 50% on the news. But here's how you know the market also likes it from the DraftKings perspective. When you pay a premium for a small company and you acquire them, generally the company paying the premium, like we looked at Kansas City Southern earlier, right? Kansas City was the buyout target. Kansas City jumped up on the news over the last 6 months. Same thing Golden Nugget did. DraftKings should have dropped on the news. You would think if they were overpaying or any of that analysis. No. Investors loved the news. They like the partnership. They like the opportunity, and they believe in the growth areas moving forward. Couple of moments you could wait for if you want to be patient, my queen. You could wait for a breakout at 55, or you could wait for a breakout at 57 if you're looking for directional entries. There's a pivot point at 55 that is right on the 200 period moving average from a month ago. There's also another one from about 3 weeks before that. If you need that, you could start out with covered calls. Go to the option chain here for a second if you can, Coach Mark. I appreciate that. Sitting at 52, if we just took a standard covered call approach, 38 days would be fine. 40 delta, you pick up $2.20 on that call. And can you or even 30, right there. 220 on a $52 stock is near 4% ROI. That's because the implied volatility of DraftKings is around 50%. This stock has IV built into it. So it's one of those kind of companies, Emily, that a trader like you, an investor like you, that has the ability to convert to cover call, to protect with put options. The option chain is very liquid, and it's got the kind of juice behind it that when and if it wants to fly, it's the type of stock that can absolutely fly. I like the themes that DraftKings has developed. I like the fact that even on a bad earnings report, they were talking about some detail that mattered to me. And I'll give you a few numbers here if I can. 1.1 million monthly active unique paying customers with DraftKings, which was up big from Q2. Okay. They had revenue grow 320% on a year-over-year basis. And you might be thinking, well, yeah, everybody had that last year. DraftKings is an online gaming company. Anybody at home could have got on DraftKings and still did business with them last year. Sports were down, yes, but all their revenues are up big across the board. Monthly active users are up big. Payer retention on their key branding products like iGaming, which I looked into when I wrote the story for the Huddle on Friday, we're showing a lot of strong numbers as well and growth. I like what they're doing. I like the management. And quite frankly, make it very, very simple. I think the deals they've been making for the better part of a year, as I've been tracking this stock as an investment, have been smart. They make sense for what this company needs to grow into its next version of itself. So DraftKings is my submission here for Tuesday, August 10th to my queen.
Great analysis. Thank you very much. Now we'll hear Mark's Queen's Court.
I've been bringing you some defensive plays a lot lately, my queen. And I'm going to continue to do that. Maybe not in a classic defense. This is going to be an area of the market that you love already. I know that. My biggest worry today, my queen, is that I'm going to bring you to an area that you already have a lot of exposure, and I'm not bringing innovation. But I'm going to talk about the financial sector and a couple different ways to play it. And the reason that I personally am upping my exposure to financials, when I think about bearish themes and bearish storylines in the market right now, what do we got? Got inflation, right? Comes and goes through the course of 2021, but it's present. We're going to have more inflationary reports the next couple of days with the CPI and the PPI report. It's going to be very fascinating, but that's been one of the stories. The Fed tapering, not being as accommodative. That's been something hanging over the market, all year long, but certainly recently, and will continue to do so moving forward. You have increasing talks about companies' margins. How inflation is a real thing. Tyson Food CEO the other day said on his earnings, he's like, we can't raise prices fast enough to compensate with how fast prices are being raised to us. Talking about, real pressure on being able to push out prices versus, cost that impacts companies' margins. And so when I look, we got some bearish storylines. Now, they might not impact the market at all. They might be nothing burgers, but they, from a market totality, but they're there. Well, I want exposure to an area of the market that counterplays these. Now, I can go defensive stocks in general, but I want an area of the market and I want to increase exposure in financials, because if inflation plays out and it pushes the Fed action, banks, rising yields. There's a reason banks went up on Friday and got a little jolt continuing today. They do well in that environment historically, and we've seen short-term evidence of that. Bank margins aren't impacted like a lot of consumer good companies, like a lot of companies that are facing inflationary. Now, yeah, you can have wage increase like you could in any sector, but a lot of the inflationary pressures that are out there, which could manifest themselves in a lot of sectors, in a lot of industries, in a lot of ways in coming quarters, banks have some insulation from that. And so the negative themes pushing the market, I'm not necessarily afraid of them, cautious, concerned, worried to some extent, but definitely paying attention. But I want to up area in a market that has got a little jolt off the unemployment area and make sense as a play against these bearish themes, actually can be a beneficiary. So as my portfolio as a whole, if it gets rocked for a week or a month or a little time period because one or more of these bearish themes play out, I got another area of the market, and increasing my exposure to that area that can help balance it, maybe even benefit. Now, I'm so tempted because the play I like the most of the company in this from a lot of different perspectives is one of your, well, I know how you feel about Bank of America, right? So I just wanted to point out, I really like Bank of America from a charting perspective. I think there's some there, but we're going to see a lot of similar analysis in a lot of different companies we go across. A lot of the banks trap below that 20 weekly, which is a significant area of resistance, starting to stretch our wings. So whether I go to JP Morgan or Citibank or Bank of America, I'm going to see some pretty similar patterns. Things that are prone potentially for some directional movement. Not just, I think there are conservative covered calls you can do, but I also think there's some directional exposure in a theme. Now, the one I'm going to officially present you today is the, what is the kind way to put Wells Fargo? The least favorite child of the major banks. How about that? Well,
Okay.
I could find some.
Yes, that's perfect.
I could find some more derogatory themes, some
No,
ways to
that's
phrase
good.
it, and the reason I'm highlighting Wells Fargo, because the logic of increasing exposures, not just to financials, to banks specifically. So I think this is an industry play for me, increasing to financials, but specifically in banks. For all those things. So all that applies to, pick your poison. What I'm going to present to you specifically Wells Fargo. I like a stock that's been beat up over the years, right? I like to give it some preference because I think it can outperform in the run ups. And we've seen a lot of that in Wells Fargo off the bottoms in March. Now, all banks have done well, especially since the election. Wells Fargo has had a good run, to say the least. I like the specific technical pattern and the room it still has to run. Let's go to a longer chart. I like that we are just surpassing those COVID lows, right? When a stock is out of favor in the short term, which Wells Fargo, due to good reasons, management decisions that they're working hard to rectify and create some of the solutions to the systematic problems that have plagued the company. I like when these turnaround stories, you continue to see evidence, and I like where it is in the relative valuation. I'm basically getting Wells Fargo in 2019 prices with evidence of systematic changes happening within the company with pretty healthy earnings report this last quarter as well, like a lot of the banks did. I like the room it has to run on the chart as well. Now, Wells Fargo would not be my first choice today. Bank of America would be, but I can't even imagine how many shares of Bank of America you already own. So, I'm presenting a different, and I like the specific daily signals that are being produced on this Tuesday, August 10th. From I got to act if I'm going to act standpoint. right? Multi-month consolidation that occurred, breaking forth of that range starting on Friday, seeing follow through with a lot. Gonna have some chop on the chart, right? Historic chop. But in the short term, a lot of clear air, clearing some of the major moving averages, which oftentimes can act as a little catalyst in some themselves, battling the 200 weekly, clearing moving averages along the way, clearing the 50 monthly, starting to have these long-term moving averages no longer act as resistance, but now acting as support. And that support is really close by. So even if I get a jolt in the short term for whatever reason, let's say yields plummet tomorrow because the whole economy is going to crash. I got some really strong support levels underneath, relatively close to the accelerating price I have now. Feels like one of those longer term position trades, great entry points, getting confirmation on monthly, weekly, and daily charts. I think there's still relative value. I think some of the systematic problems are being addressed by management. I think there's a lot of upside here. And most importantly, though, I think increasing exposure to financials is a reasonable tactical play right now, given the bearish themes in the market. I present Wells Fargo to my queen.
Thank you, Mark, for that. Oh, goodness gracious. I really, really, really wanted to chop Tim's head off today. And you were doing so well, Tim. You did your analysis on, on DraftKings, and I could tell how excited you were because you own the stock.
You can tell Tim loves the company.
I do.
Absolutely. I mean, you had me going, and and I'm like, okay, he's gonna do it. He's gonna get through it. He's gonna get through the whole thing, and not refer me as Emily. And then 1 minute before you're about done, you go, Emily, and I'm like, goodness gracious, what am I gonna do with you?
What am I gonna do with you?
Listen, if it's a respect issue, I deserve to have my head chopped off. I will take it.
However, Mark, on the other hand, starts off by saying that he's going to go and present something that I may already have exposure in, but you did have a really, really good analogy behind why to add more exposure to the financials, and I loved it. And then you bring up Bank of America, and I'm like, ooh, even better. Then you bring up Wells Fargo. Now, this earlier in the beginning of the show, we said if it ain't broke, don't fix it, right? So if I already have exposure to Bank of America, why would you try to sell me on the other sibling that's like, the one that you just cannot depend on? Now, I get that they're trying to do well and redeem themselves, but I probably would want to see more from Wells Fargo before I was to pull that trigger on them. And because I already have one child that behaves very well, I am not going to to ignore that child and give Wells Fargo some exposure here, especially when Bank of America has been working very well for me. But I understand where you're coming from in terms of I already have exposure in Bank of America, and you're just trying to give me a different stock to look into. But I love my Bank of America, and I don't. If I was going to add exposure, I'm going to add more exposure to Bank of America, not add Wells Fargo to my portfolio. So. Oh, I really want to chop Tim's head off, but I love DraftKings. I love.
Do you like that opportunity on DraftKings?
I like it because I kind of put it off the side. I took it off my watch list because it just kind of fell out of favor, right? And it's just been doing nothing for the last few months. But now that chart is looking very, very pretty.
It's not quite there yet. It's not today, right?
Yeah, no, not today. 55
I love
breakout.
the development.
I'm in. Yeah, 55 breakout. I'm certainly in. And I don't mind waiting. I don't mind putting it on my watch list and putting an alert and getting, and getting notified once it does hit 55. So whether that takes a week or whatever, nothing, not a big deal for me. I still like it. Mark, I can't believe I'm doing this to you. I have to chop you off.
I understand. Listen, I support it because I love your because my overall theme was add exposure to financials, and you're right. If it's not broke, don't fix it. There's nothing wrong with cost averaging up. Jesse Livermore famously said, listen, I'll cost average up all the time. He had some clever way of saying it, right? So if it's not
Yep.
broke, don't fix it. You see strength developing, and I think the counter trend. I should have known. I should have stuck to the thing. I support it. But I ain't sharing another screen the rest of the day, y'all, because I'm dead.
Well, I will give you a gift as we transition out of the Queen's Court. So, Mark, your head is now rolling down the hill.
It's rolling.
Your dead
Such a
body is.
smug. I just want
Actually, a stock market I know you have interest in. I got a question from the chat. We're going to end on this one. Hammer Investments, one of our veteran team tackle members, brings up CCJ and has a question on it. Asked, do you feel like CCJ is starting to set up a little bit here? I do. I actually like the daily characteristics. I like the deeper pullback it's had over the last 3 months and whatnot. And then I do have a question on the option chain from Hammer as well, Mark. So give me your thoughts on the stock here.
Listen, CCJ is one of those, when you start to get some choppiness, I look at major moving averages. I've talked about this in my trading lab with Ford Motors. I've talked about this with lots of different stock. I can't think of that, but I'll bet on that rising 9 monthly, especially when it corresponds with general horizontal support levels that can be very choppy on a stock like CCJ. So there has been cash flow opportunities that I've been advocating. Bet on the support average move, all of that stuff. But then when you turn to potential more opportunities, right? What are the next level of opportunities? We are seeing a version of this pattern play out. Big sell-off in lots of areas, right? Lots of areas of the market. We are seeing support levels because we have a support level on CCJ. This is one of the 100 darlings that I follow on a daily basis. Got a horizontal support level, right? Pretty common in lots of areas. You're seeing in certain areas of the market a really tested, like let's pound it on the intraday charts over and over and over a couple week period. Support level form on CCJ, but this is not uncommon on a lot of areas of the market. I got a saying, I say it all the time. If bears can't win, support holds, there's only one direction for the stock to go. And that's why I love the psychology of this. And I referred to it on crude oil earlier. I love it when a support level gets pounded, especially after a big sell-off. Just happens to form a little bit higher than the historic support level. I love the psychology of it. And I love it a do-si-do on the 20-day moving average. Now you still have, and it's the nature of sell-offs, you still got junk up above, right? You got falling moving averages on weekly chart. I mean, just expect that to always happen. And so I usually, in these situations where I start to get some signals where I might want to go for some price appreciation, I'll still oftentimes sell low level delta calls, but you're getting it in this area in CCJ, not XXJ. That is CCJ's naughty cousin, XXJ. But on the daily chart, you're starting to get these patterns develop, not just on CCJ, a lot of different areas of the market. Tim referred earlier to XLE, some of the relative strength that you're seeing there. Similar pattern, right? Like which one is CCJ, which one's XLE? Little bit of strength, try to push it a little faster on CCJ, but you're getting the relative patterns. I like when these stability patterns form. I often play them in some form or another on my preferred companies. I got a lot of these to choose from right now. If I could only get them on the reopening plays, that exact pattern on Delta, could I that's all I want, right?
Yeah. And another ancillary question here on CCJ, and go to the option chain if you can. I haven't seen this, so if it's there, I'll be very, very curious to see this on CCJ. There was 100,000 open interest on the 25 strike in September. Somebody had a question about. Do you have open interest up here?
I don't think I do.
Can you flip Vega, for example? Just use one of those. Just do open interest real quick.
For September?
Yeah.
100,000 on the 25.
That's interesting. I mean, it does trade a lot in the chain, Mark. This is a very liquid option chain. Does that concern you at all? Or do you think maybe that's just covered calls from some big investor?
I mean, a lot of solutions, right? CCJ is the largest uranium mining company in the United States. I think there's some in other parts of the world that are bigger. But as far as publicly traded things, I mean, CCJ is, it's a big company. It's a big company. Maybe not, tech size, but for its space, it's the largest miner in the United States. That's high open interest, though. There's without a doubt. That's not usual. one could speculate on a million reasons, right? On why it is.
Yeah, but it's not 100K against 200 in every other strike. I mean, I see 44,000, 11,000, 25,000. It's more.
We
And
could speculate.
yeah,
I mean, we could speculate on reasons, but
we
it
don't know.
doesn't concern me.
No,
Like,
no, not at all. The opposite probably gets me interested. It makes me want to.
yeah, right. You know, it's like, somebody knows something. I mean, that's the conspiracy person in me, right? Somebody knows something that I don't. Maybe I should, you know, maybe I should not sell that low delta covered.
I love it when your brain starts working out loud. So we're. Do you want to now go directional here on CCJ?
No, I'm just saying that's how my brain works.
All right.
Like,
I know you. You're going to
something
pick cash flow. You're going to pick cash flow. It might just give you more confidence in your cash flow if you find it.
I like these patterns though, right? Because, you know, even if I get stuck on a signal where I'm trying to push against trend, I got support levels underneath, rising moving average. I got a lot of stuff that can hold support that can allow me to roll down calls, do all kinds of stuff to manage it. So CCJ has been a good stock for me all year. I don't see that changing anytime soon.
Last one, then we wrap up. Jeremy Johnson, my man out there, hashtag Team Tackle. Jeremy, great to see you again. Since we're talking banks, can you give me thoughts on PAC W? And last one here, Mark, then we're going to wrap.
I don't have any specific, I'm not a company.
Nice reversal chart.
But, you know, it is, you know, consolidation. Listen, it's me. And I think Emily, I mean, you know, I'm not going to speak for you because, you know, the second I got my head chopped off, you become M, you know, because but I mean, you always love financials, right? And, you know, like, I mean, are you looking at more exposure in financials? You know, maybe PAN W might not be your choice, but like in general?
I mean, it goes back to what you said earlier, right? We like the space, but it's competing against other, right? I have the capital to put in financials, but now this has to compete with Bank of America, even Wells Fargo to some degree, right? Or whatever other banks that are out there,
or JP Morgan, or Zions, or like
any one of the keys is a, you know, nice cup of call stock that we have on our Tackle 25. So it has to, you know, win against all the other ones that I know, like, and trust. Before I can say it's a yeah or nay for me personally, but I like where it's sitting at. It's, you know, at that moving average. It's about to break that resistance level there, you know. So if it's a company that you like, I wouldn't see why not. But for me, it has to compete against everything else that I already have on my watch list in financials.
Yeah.
Yeah, because I mean, it's like
good looking setup though. So
yeah, it's like anything, like, you know, you like an area, Bitcoin, banks, whatever it is. I mean, you still are going to cap out somewhere, right? You're still going to cap out because it can't become the monster in your portfolio that you're so.
Yeah, because then you're not position sizing accordingly. You over leverage in one area of the market over the other. Yeah, so you still have to have that balance.
And so you can have overexposure in an area, but you can't like let it, you know, consume your account. So, you know, it's that competition within the space that PAN W is up against.
Yeah, well, and financials are hot. So if you go through your watch list and PAC W has a place there, I wouldn't have any criticism.
I mean, once again, I don't know the company well enough to say yes, no, or why from a fundamental perspective. You know, and that can be a tie-breaking decision. You know, technicals, fundamentals, you know, personal. There's lots of factors that go into who wins that that competition.
That's fair.